So I got stopped out here. We reversed up strongly and then created a breakout pullback buy above the moving average. So I bought above there with double size. So here I bought with one contract and here I bought with two, thinking that this is a better buy to get up to test the high close. I'm actually going to have my stop below the high one signal bar, so right there. And that obviously makes the math a lot better. So this up here is 2 times my risk, and the high close is above that. I'm going to look to exit one contract at 2 times my risk, and I'm going to move my stop to one tick profit. When it hesitates like this below a target, what I've started to do now is when I start to feel nervous and I feel like I want to exit the trade right away, I just think, would I ever sell here, put my stop there, and look for a target down here? I would never do that just because it just seems so unlikely for it to happen. It looks like a bad trade. So if I wouldn't sell here, put a stop here and a target here, then why am I worried if my target's here and my stop's here? It's just the opposite trade. And that kind of calms me down and gives me a little bit more patience to stay in the trade. Because look at it. It's if I sold here with a one tick stop, expecting it to get all the way down here, I think that that's something that no one would do because it's so extremely unlikely. So there's no reason to worry about the opposite situation, especially because this is not a structural target. It's not like this is resistance. This is just 2 times my risk. If it was a structural target, that would make more sense because it's possible that it's bouncing off resistance. But in this case, I don't think that's the case in this situation. All right, got filled there on the first contract. So I ended up getting stopped out of the trade that I was trailing below here where my hard stop was moved to. And then we got a big bear bar here into support and didn't close below. I thought we were still going to be in a trading range, so I bought that close, looking for 2 points up, risking 2 points down. I thought it was more likely that we stay in a trading range. I don't think it was impulsive. It might be a bad decision, but I was aware of that possibility. So I don't think I just made a decision because I was stopped out. I think it's something that is reasonable to do. It just might not be right in this situation.
Stop filled.
So I ended up getting stopped out there and wiping out the gains from this trade. So I'm still down 35 bucks, I think. $37. This trade got me to break even, and then I just went back down 37 with this loss. I think if this bar closes on its low, it would make us always in short, and I would sell below there or sell the close because we straddled the moving average, and then a 2-bar breakout, I think, would probably take us to a new low. Not low of day, but a break below the low of this trading range. The reason I bought there is because I thought we'd form a small trading range here and still get up to the high close. And I didn't think we'd get breakout and follow through. But now that we have breakout and follow through, I think that favors the downside.
Order filled.
I just went short there on the close. Stop is 2 points above the second bear bar. And I'll exit if this bar closes on its high. Move my stop to 1 point above this bull bar. Looks like a better sell was a 2-point pullback below this close instead of where I sold. But I think selling this close and more higher is probably also okay because there is a chance that we just collapsed from here and went down to a new low below the low of the trading range. So I think both are okay. So we got a new low of the trading range. I'm going to move my stop to break even. So I'm going to exit one contract at 1 times my initial risk.
Order filled.
Got filled there. Getting a pretty good breakout here, but I think probably need to see follow through to get more down because this 1-bar breakout often fails. I think I'll take this off.
Order filled.
I was going to exit on the close of the bar, but the bar already got so big. Only 20 seconds left in the bar, so I thought if it collapsed down to the open of the day, I would just take my profits there. But didn't quite get there, and only 10 seconds left, so I probably would have exited around the same price that I did. I made a little bit over 4 points on it. So back to break even, I think. Up $3 on the day. Looks like we did collapse down to the open of the day. But those kinds of situations, like especially now, before I would be making that discretionary call up here somewhere with like 2 points, much less than my actual risk, or sorry, much less than my initial risk. Now I'm making it here after what I feel is an adequate reward compared to my risk. So although I may have left a lot on the table, if I had targeted the open of the day, I would have made four extra points. So I left some on the table, but I didn't mess up. I didn't make the trade bad by exiting too early. Because if I exit up here discretionarily, then I've messed up the math because I'm risking 4 points to make 2 in a situation that's probably not 80% or 70%. But here, once I've already met the criteria for the math to have a profitable trader's equation, then I think it's just about leaving some profits on the table, but not messing up the math of the trade. I hope that makes sense.